Welcome back. With a number of new floats coming our way and some ones already have hit the market, let's get the fund manager's view from Roger Montgomery, Chief Investment Officer at Montgomery Investment Management. Roger, great to see you.
Nice to see you too.
Now, before we get into the topics I wanted to talk to you about,
yes.
Now, because Zero's gone from about $12 to about 23
Now,
cents.
does everyone listening and watching know what Zero is?
Yeah, we've covered it. Zero is a rival to MYOB.
Yeah,
it's
okay.
in the
Accounting, in the cloud accounting software provider.
And the reason why I want to put you on the spot, because when I was doing the MC job for them, my wife said, "Gee, maybe we should buy some stocks in that." So I said, "Well, I'll talk to Roger." And Roger, you went through it and said, "Well, on the fundamentals, it's hard to actually recommend them." And since then, it's gone from 14 to 23.
Because it doesn't make any money at the moment.
Tonight, I'm in a lot of trouble. So you explain to me why I was rational in saying, let's just wait a while.
Well, look, one of the things that investing is not about is predicting share prices. So investing is about buying a great quality business at a discount to an estimate of its value. That's what investing is. Anything else is speculating.
Punting.
Right? Correct, punting.
That's Caulfield Cup merger.
And Australia loves a punt, and I accept that. But with the sort of money that people deal with in the stock market, you shouldn't be punting, you should be investing. And the issue for Zero is that with 300,000 or 400,000 customers, they're not making a profit. The price is forecasting 3 million customers, or even more than that, and they haven't got there yet. So really it's speculation about the future. And we've seen lots of mining companies that have listed on, or prospecting companies, mining exploration companies, that have rallied in anticipation of making their first profit. And when they make their first profit, or they pour their first ingot of gold or whatever, the price comes crashing back down because everyone scratches their head and say, okay, well, the exciting bit is over and now it's all about execution. I tell my kids that they can have desires. They've got great desires. You know, Australians have desires.
Yeah, we're optimistic.
I'd like to have this car, I'd like to have that house, I'd like to go on that holiday.
Blue sky people.
But you need desire plus action. Now, the desire is in the price, but they haven't factored in the action yet. And execution of the strategy, which so far has been very good, it's going to be a long time to be 10 times bigger than they are. They've got to crack the US, and you were saying during the break, Peter, you know, that you've got Intuit, the old owner of Quicken, and they've 95, what'd you say, 95% of the market. It's going to be a tough nut to crack. They've got a lot of work to do.
Yeah, and it's interesting, because from their point of view, and you often say this, the share price is irrelevant to the company. The company's got a goal to do, and that is keep going forward. If they're doing well enough, they can raise capital, and they raise capital very well this week.
If you're going to invest, you really should be measuring the performance of your method, not necessarily by share price movement on a quarterly basis or a monthly basis or a yearly basis, but by the incremental increase in your profit share based on how much of the company you own. And if you see the assets, the portion of assets that you own rising and the portion of the profits that you own rising, well, you're doing well. And the price is just an interim reflection of that. Only occasionally does it properly reflect the performance of the business.
Okay, let's look at some companies quickly.
Yes, a lot of floats. A white hot market. Peter, it's not often I sit here and, you know, and I've been in the markets a long time. It's not often I say things are white hot, but they are white hot right now in the float scene.
So on the temperament scale, we are definitely in the optimistic phase.
Oh, beyond in floats, we're beyond optimistic.
Yeah, but I think for the market generally, there's not.
Well, this is why. Look, I'm interested in the floats, and I'm looking at them in great detail. I'm meeting with ECM, our equity capital markets people and investment bankers, because there's not a lot of value in the market at the moment. I can't see a lot of value. But I see a lot of value in these floats.
Okay, quickly, let's go through Dick Smith. What do you think?
Dick Smith's an interesting story because Anchorage bought it from Woolworths for $20 million last September. They paid Woolworths $75 million to buy Woolworths out of a right to participate in any upside from a future sale. So Anchorage paid $95 million, and it looks like they're going to list before Christmas between $500 and $600 million in a year and a couple of months. It's pretty good, isn't it? Now, what have they done? What have they changed?
Management made a big mistake there, didn't they?
Well, what has Anchorage done? They've managed to secure Apple products in the stores, and they've managed to get Dick Smith stores into David Jones. So they're the basic two things that they've done, and it's working very well.
Is it good enough for you to say this is not bad?
I need to see the numbers beforehand, but I am going to have a close look at it.
Okay.
Yes.
Hoyts is coming back.
Well, it's on the list, and everyone knows it quite well. I don't know what the growth prospects are for this business. That's the difficulty. If it comes on cheap enough, If it comes off cheap enough, well, it could be very, very attractive. I just don't know what the growth prospects are for the cinema business. I think it's pretty mature in Australia.
Yeah, Nine Entertainment's going. A lot of people are interested in this one.
Okay. So we met with UBS and we talked about Channel 9. The upside story is that it's the first time Nine has had 5 capital cities and the synergy benefits of those 5 capital cities.
That's a good thing.
So that's a good thing.
Yeah.
And it may come on at a price that looks attractive. If I think longer term about this business, and it doesn't mean you can't make a lot of money on the float. So if it's priced keenly, you could do very, very well stagging this. But the long term, I see long term the 3 free-to-air stations being 3 Goliaths in a room playing poker with the doors and windows closed and a fixed amount of chips, being the population of Australia. And if one of them's going to get a good hand, that's a good suite of programs, and that's their year, they get all the chips at the expense of the other 2. Now next year, the other guy gets a good hand, gets a good suite of programs, he gets all the chips. But the number of chips isn't increasing unless Abbott opens the gates, which is never going to happen, and says, right, we're going to double the population of Australia, then the value of these businesses very long term is fairly stable. Not necessarily declining in aggregate, but not increasing in aggregate.
But also, they're all being challenged by things like Apple TV.
Well, you've got your fragmentation occurring. So you've got Apple TV, you've got YouTube, you've got the internet.
And Foxtel, of course.
You've got television stations now really shooting themselves in the foot by saying, well, go and watch the program again online in your own time. And people can click off and turn down the ads and do whatever they like. So that's a difficult one. We've got, tomorrow we've got listing the Australian Industrial REIT. It'll be one.
Has it always been called Fife?
Fife is the management company. I don't know what the history of the management company is. I do know that the metrics of the float of the industrial trust look pretty good. It's coming. It was listed. The IPO price was about a 3% premium to NTA, and at an 8.25% yield. And I like industrial property. I'll tell you why very quickly, because you might not know this, but tall buildings, where office towers, start out being A-grade buildings and being a great asset, and they rapidly deteriorate to ultimately becoming a liability for their owners. Why? Because what happens is the building ages and tenants move out and they go into the new whiz-bang building, and you really have to spend a lot of money to update that building. So what you find is buildings like the Chrysler building in the United States, or the Empire State building,
or the old AMP building here.
There's no banks in there anymore. There's no high-end businesses in there. You've got seamstresses and cloth merchants and the like, and really you can't afford to destroy the building and take it off Manhattan Island, so it becomes a liability. So I like the reverse. See, those buildings, big depreciating asset sitting on a little bit of land, whereas industrial buildings like sheds, lots of land, cheap building on top, cheap shed. And if they're located well, and they're located where there's the junction of the M5 and the M2 and all that sort of stuff, if they're located well and they're in good traffic hubs, well, then you're probably going to have secure tenants. So I thought the numbers for this were pretty good, and so we participated in this one. So everyone can watch tomorrow and see how we do.
Okay, fine, good. Now, ACM.
Yeah, ACM, on again, off again. I think it will come to market early in the new year. The business is a debt collection business. It competes with Credit Corp and Collection House, and it's in the business of buying debt ledgers from banks and from phone companies and from electricity companies, and saying, okay, well, I'll buy all the people who haven't paid in the last 60 days. We'll buy that at a discount, and we'll get our people to call them up and start collecting. It's owned by a gentleman named Bert Vera, who's a big racehorse breeder as well, a very colourful character and a very successful business.
Okay, so do these businesses do better when an economy is on the uptick?
Oh, the debt collection businesses? The most important thing is people have their jobs. Where the economy isn't so important as long as people have their jobs, because if they've got their jobs, they can pay back.
But a fast growing economy gives you more security in your job.
Yeah, exactly. Well, you expect that if the conditions deteriorate, then these companies will pay a bigger discount from the banks to buy these ledgers. They won't pay as much for these ledgers.
Okay. And quickly, OzForex, it has listed.
OzForex, it has listed already.
Did very well.
Did very well, 30 to 40% premium now. And let me give you an example. One of the guys at the office, Russell Muldoon, has a mate who actually needed to convert 200,000 Aussie dollars into US dollars, put 100,000 with OzForex and 100,000 Aussie with one of the banks. got $93,400 back in US dollars from OzForex and $90,000 from the bank.
Yeah.
$3,400 difference, 3.4%, big difference. So that's why this is a popular business.
Yeah.
People think it's got great growth prospects. We think it's now a little bit expensive, but as you know, we are very patient, conservative investors.
Also, it could be a takeover target.
Well,
from a bank.
It could be. It could be. The banks aren't in that space, but you never know.
Yeah, mate, good to see you.